Welcome everyone to Vested Interest. It's Shane back again for the stock pick of the day video. It is October 31st. Happy Halloween, last day of the month. Hope you are having a great Halloween. Today we're going to take a look at one out of the industrial sector, Caterpillar. Let's jump right into the video because I need to get this one pushed out so I can take my kids trick-or-treating. Let's go. So if you want to know more about this company, check them out at www.caterpillar.com. That is www.caterpillar.com. That is their homepage where I pulled this information from. Pliny and others in the Holt family helped persuade Benjamin that Caterpillar was the logical choice. They are talking about the name for the company. Eventually, the name stuck, and in 1909, the first Holt tractor to wear the Caterpillar name crawled off the assembly line. In 1910, Holt registered the name Caterpillar as a trademark with the U.S. Patent Office. And in 1925, when Holt and Best merged to form their new tractor company, they used the name so familiar to people around the world, Caterpillar. The Caterpillar Tractor Company is today known as Caterpillar Inc. The rest, as they say, is history. And that is what they are still manufacturing today. Tractors, construction equipment, road equipment, right? They are a equipment manufacturer, big construction type equipment you might see on a commercial construction site, even a residential site, still producing tractors, front end loaders, just anything around the construction industry. That is what they are producing. From 1909, whenever they first got started, before they were Caterpillar, to 1925, whenever they merged and became Caterpillar. This company has been around over 100 years. Not quite 100 years. 2025 will be 100 years for the new company Caterpillar, but overall this one has its roots back to the early 1900s and actually goes back a little bit further than that into the late 1800s with Holt Tractor Company. So if you wanted to go again, check them out at caterpillar.com. You can get more information on their history and what all they provide as a company. Now, the reason we are taking a look at them, down 6.65% on the day. We are talking about Caterpillar Inc., ticker CAT. Unlike the black cat that you might see walking around tonight if you're going trick-or-treating, this is not an animal here. This is the producer of heavy equipment for construction companies, for farmers, that sort of thing. Close out the day at $226.05. 52-week range as low as $204.04, as high as $293.88. Definitely closer to their 52-week low, though not right up against it. Still have a bit to drop here. Average volume of 2.5 million. Today's was 12. Big sell-off on the day. Market cap of $116.72 billion. Now, I had to pull their beta, their EPS, their dividend, and their ex-dividend date from another source because Yahoo Finance didn't have it, and that's why I always recommend more than one source. So their beta is 1.08, so they are just a little more volatile than the overall market. PE ratio sitting at $16.72 per share. That's pretty nice PE for this type of company. EPS very high on this one, $16.06 per share. Earnings date was today, so that's probably why you had big drop. You want to go look at the earnings date, see what the issue was. They may have an issue with revenue. They may have an issue with their forecasted projections. They may have not hit their numbers that they were targeting. Dividend is $5.20 paid out in the year. They are a quarterly payer. We'll see that here in a minute. Nice starting dividend yield on this one, 2.3%. Ex-dividend date was October 20th. We are past that. Looks like they were going to pay out on November 20th, so they will be paying here in the month of November that we're heading into. And a one-year target estimate, at least according to Yahoo Finance, of $284.95. So they do not see it getting back to their 52-week high here over the next year. Now, I like to go into statistics and look at dividend yield theory. I like 75% payout ratio or less. To do that, we typically look at the 5-year dividend yield average, but there's a lot of NAs on this one for some reason. I'm assuming it's because they had their earnings date today and they are going to update this information and just haven't done so already. So we're going to look at their trailing annual dividend yield of 1.49%. We're going to compare it to today, 2.3%. According to the dividend yield theory, at least comparing it to their trailing over the last year, they are undervalued, right? So if this number, their current dividend yield, is higher than their 5-year average, or in this case, we're going to use a trailing annual, then that speaks to undervaluation. If the number was lower, that would speak to overvaluation. They are inversely correlated. Now, I like to get into the financials, and there's a lot of good information under financials. You're going to want to look at the balance sheet, the income statement. What are they doing with revenue? Is it growing over time? Are they paying down debt? Are they taking on more debt? Are they buying back shares, or are they issuing more shares? How are their assets over liabilities? Very good information in there. You want to know and understand all that information if you are interested in investing in a company. If you don't want to do that type of research, you should stick to ETFs or index funds and let them do that research for you. But in our case, we're going to look at free cash flow. We want growing free cash flow because as dividend growth investors, we want growing dividends over time, and dividends are paid out of growing free cash flow. 2019, $4.2 billion. 2020, $4.2 billion. Pretty flat, though actually down slightly. 2021 up to $4.7 billion. 2022 up to 5.1, and currently in 2023 looks like 7.2. So they are definitely growing over time. They are also repurchasing their own shares. Quite a big tranche in 2019, down in 2020, back slightly up in 21, back to about where they were in 2019 and 2022, and looks like to date they were about in line with what they were looking at last year. So nice to see them repurchasing their shares as a company. That makes you hold more of the company as a shareholder, even if you are not adding additional shares. Let's keep going. Now, I always recommend more than one source. Another one that I like is stockanalysis.com. You pick any sources that you want. Just make sure you are picking more than one so you can make sure the information you are getting is accurate. And as we just saw on the previous page, sometimes the information is not accurate and not up to date. So that is why I like more than one source. So I can pick and choose and make sure the information that I'm getting is accurate. You pick any choices you want. These are just two I like. I am not affiliated with stockanalysis.com or Yahoo Finance. Now, according to the 17 stock analysts David had take a look at this, they call it a consensus buy. They have a low estimate of $191, which would be a 15.51% decrease from where it currently sits. So they see some downside here, potentially down in the 190s. Average estimate is $276.18, which would be a 22.18% increase from where it currently sits. That's pretty much in line with what we saw on the previous page from Yahoo Finance. And if it happened to hit their high estimate of $334, that would be a 47.75% increase from where it currently sits. All the while, you could collect that 2.3% dividend yield at least if you were to buy them now. Now, you can go into statistics here. You're going to get a lot of the same information, actually the same information, just shown in a different manner. And it actually goes back a little further here in stockanalysis.com than Yahoo Finance does. I like to look here for return on equity and return on invested capital and see how the company is doing investing back into itself. And I like 10% or better for this. Return on equity, 49.2%, smoking high number. That's very good numbers for return on equity. And return on invested capital, 14.26, above the 10% I'm looking for. Very nice numbers overall. I also like to look at earnings per share growth forecasted over the next 5 years. I like 5% or better. This is sitting at 8.93%. So far, all the numbers really look good. If you were interested in this one, looks like it as at a decent price. I might want a little bit more of a pullback, especially if you went to look at their earnings and see what the issues are that people are seeing with this one. There's obviously something if it pulled back this much on the day, but it may not be as big of an issue. Sometimes the market does overreact, but definitely make sure you do your due diligence and look at what their earnings projections are, as well as what they just either hit or missed. Now let's look at the dividend. I like to look at the payout ratio. Under 75% is what I like. 32.38% payout ratio, very low. Dividend growth of 8.23%. Very nice dividend growth on this one. Went back to 2020, October 23, they were paying $1.03. Raised it up July 19th of 2021, $1.11. Raised it up again July 2022 to $1.20, and again in 2023 to $1.30. So I would expect them to continue this trend, and in July 2024 raise it up again. Very nice numbers overall on this one. That is Caterpillar. This is the vested interest stock screener. This is how I put together the videos, how I look at a company on a high level. If it meets 5 to 8, it's investable. That means it goes in the stockpile that I have, my watch list, and then I do more of a deep dive. I look at the financials. I get into the books of the company, see how it's projected to grow, see how it's been growing, and really do a deep dive. If it's a financial company, it must meet 6 of 9. I add price to book. You can really use price to book for any company, but it's really specifically geared towards financial companies like banks. Well, that is it for this one. Happy Halloween. Hope you have a great one. I am going to wrap this one up and get my girls out. 6 o'clock, I think, trick-or-treating starts. They're supposed to be meeting a couple of friends, and then we are going to walk around the neighborhood. Hope you have a great Halloween. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this, tips and tricks that we've learned along the way. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Caterpillar you'd like me to cover in the Stock Pick of the Day series, go ahead and drop that down below as well. Don't forget to hit that notification bell so you're notified whenever we put out any new content. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice counsel of a certified financial advisor.